Friends, we will continue with the question number 39. A, B, C are partners in the business sharing the profits and losses in the ratio of 2:1. C died on 31/3/2006. The profits for the financial year 5 and 6, April to March, is rupees 64,000. The share of the deceased partner in the profits for the year will be. The death happened exactly on the closing date of the financial year, so we are happy for it, not for the death, for that being happened on 31/3/2006. So he is going to get his share from the first day of the financial year to the date of the death as per the agreement. So take the calculator dosto, 64,000 into 1/5. 64,000 into 1/5 is equal to 12,800. A is the right answer. Question number 40. A, B, C are the partners sharing the profits and losses in the ratio of 3:1. C retires on a decided date and goodwill of the firm is to be valued at 60,000. Find out the amount payable to the retiring partner on account of the goodwill. On account of the retirement, if the goodwill is to be accounted for, it is to be distributed among all the partners in their old profit sharing ratio, friends. So accordingly, C's share will be 60,000 into 1/6, 10,000. A is the right answer. Question number 41. M and N are partners who share the profits equally and have capital balances of rupees 10,000 and 15,000 respectively. N, with the consent of the M, sells one half of his interest to P. What entry is required in the partnership books if sale price is 6,000? See, what is the point here? M and N are the one who are the partners who share profits and losses equally. Capital balance of them is 10,000 and 15,000. N, with the consent of the M, sells half of his interest to P. What is the entry that is required in the partnership books if the sale price is 6,000? See, let's suppose myself and Divya are equal partners. Now I wanted to bring Monica as a partner, but Monica says I don't have the money. But still I want to have Monica as a partner. Then Divya said, sir, you can very well bring Monica as a partner. Without Monica bringing the money, you can very well transfer from your capital account to the Monica's capital account. So here, who is thinking of bringing a new partner? P. It is N who is thinking of bringing the new partner. And what is N's capital? 15,000. And since he wants to give 50% of his share to Mr. P, 50% of his share to Mr. P, then he needed to, and one half of his interest he is making a sale to Mr. P, and that too also for 6,000 rupees. So in that case, what need to happen, friends? N's capital account is to be debited and P's capital account is to be credited. Write the point. If one partner makes sale of his interests, then to that extent his capital account is to be debited and new partner's capital account is to be credited. Entry is N's capital account debtor to P's capital account. This entry you are going to pass with what amount? With the amount of the sale price. B is the right answer. Question number 42. A, B and C share in the ratio of 3:2:1 respectively, and their capital balances are rupees 20,000, 15,000 and 10,000 respectively. B retires and his share in the firm is purchased by other partner. The entry to be recorded on B's retirement is what? Of course, B's capital account is to be closed, friends. So debit the B's capital account, and then that is going to be purchased by the other partners, means A and C's capital account is to be credited, and this amount of 15,000 is to be distributed between A and C, in which ratio? 3:1. So 15,000 3:1 में distribute करे तो क्या होगा? 15,000 of B share among the A and C in the ratio of 3:1 करे तो 11,250 and 3,750 आ जाएगा. So B's capital account is to be debited with 15,000, A's capital account is to be credited with 11,250, C's capital account is to be credited with 3,750. So D is the right answer. Question number 43, friends. Retiring / outgoing partner is liable for obligations incurred up to his retirement. So he is liable for obligations incurred up to his retirement. C is the right answer. Question number 44. Claim of the retiring partner is payable in the following form. It may be fully paid in cash, it may be fully transferred to the loan account, partly it may be paid in cash, and partly balance can be transferred to the loan repayable account. So any of the above form, D is the right answer. Question number 45. The outgoing partner is compensated for the parting with the firm's future profit in favor of the remaining partners. In what ratio do remaining partners contribute such compensation? In their gaining ratio. A is the right answer. Question number 46. A, B, C are the partners sharing the profits and losses in the ratio of 1/2, 3/10 and 1/5. B retires from the firm. A and C decide to share their future profits and losses in the ratio of 3:2. Calculate the gaining ratio. Gaining ratio is nothing but the new ratio minus old ratio. Write it. A's gaining ratio 3/5 minus 1/2. 3/5 minus 1/2 is how much it is? How much? 1/10. B's, then the next one is that of the B. What is it? 2/5 minus 1/5. 2/5 minus 1/5, how much it is? Who is retiring? B is retiring ना? तो C का न्यू रेशियो क्या होगा? 2/5. C का ओल्ड रेशियो क्या है? 1/5. Who is retiring? Huh? Who is retiring? B is retiring. B is retiring and C is continuing, A is continuing. And C's new share is what? Here their future profit sharing ratio is already given. New ratio is given as 3:2. So C कितना आ रहा? उसका न्यू रेशियो 2/5 आ रहा. उसका ओल्ड रेशियो कितना है? 1/5. Then how much it is? So 2/5 minus 1/5 is equal to 1/5. So now A का sacrifice, A का gaining is how much? 1/10. And B का C का gaining is how much? C का gaining. C का new gaining ratio. Just now you calculated, na? Not B. When B is retiring, where do you calculate the B's? 1/5. How to make 1/5? With a 10 denominator, multiply with the 2, divide with the 2. So 2/10 आ जाएगा. So 1:2 ratio is the gaining ratio. Gaining ratio is 1:2. 1:2. Question number 46. A is the right answer. Question number 47. A, B and C are partners with capitals of 1,75,000 and 50,000. On retirement, his share is acquired by A and B in the ratio of 6:4. What is the gaining ratio? What is it? A, B, C are partners with capitals of 1,75,000 and 50,000. Nothing is stated regarding their old profit sharing ratio. If nothing is stated regarding their old profit sharing ratio, it is to be presumed that they are equal partners. They are equal partners. And then on retirement, who is retiring, friends? C is retiring, because A and B acquired the C's share in 6:4 ratio. Then what is the gaining ratio? See, how much they are getting is clearly given. How the old partner's share is going to be shared between the existing partners is clearly given. How to calculate the gaining ratio? Write down. Gaining ratio of A. Gaining ratio of A is equal to old ratio of C into old ratio of C into 6/10. That is 1/3 into 6/10. 1/3 into 6/10. 1/3 into 6/10. 6/30. Yes. Then B, that of B, 1/3 into 4/10. 4 then न्यूमरेटर में क्या है? Numerator. I am asking numerator of both the people. Denominator में? Numerator 6 for whom? A. For B, what is the numerator? 4. 6:4 means 3:2. A is the right answer. Question number 48. A, B and C are partners sharing the profits and losses in the ratio of 4:3:2. B retired on 31st March 2009, on which date capitals of A, B, C after all necessary adjustments are 39,300, 39,600, 18,300 respectively. The entire capital of the firm as newly constituted is fixed as 56,000 between A and C in proportion of 5/8 and 3/8. After passing the entries in their accounts for adjustment, calculate the actual cash to be paid off or to be brought in by the continuing partners. Friends, how do you do this? That is, first, present existing capital. Write down. Present total existing capital. Present total existing capital is 39,300 plus 39,600 plus 18,300. Totally 97,200 is a point. Isn't it or not? Total is 97,200. Now they want to keep the total capital fixed at 56,000. That means 41,200 of the amount is to be paid off. Out of that 41,200, 18,300 is to be paid off to whom? Is to be paid off to the whom? Paid off to Mr. C. Then remaining is 22,900. That 22,900 is to be paid off to whom? To the A and B. How much should go to A? How much should go to B is to be decided. First, carefully observe, that is 56,000 you distribute in 5:3. The final capital of 56,000 you distribute it in 5:3. That is 56,000 into 5 divided by 8. 35,000 hai. Isn't it or not? Whereas his capital is how much? A's का present capital कितना? 39,300 है. तो उनको कितना देना पड़ेगा? Minus 39,300 will give you 4,300 need to be paid to A, और B का कितना पे करना? 56,000 into 3 divided by 8, 21,000, whereas his capital is what? 39,600. That means 18,600 is to be paid to Mr. B, 18,300 is to be paid to Mr. C. So, just to see, A will withdraw how much? 4,300, and then C will bring in 2,700. Acha, here who is retiring, friends? It is not Mr. C, it is Mr. B who is going to retire. If that is the case, just have a look at 56,000 into 3 divided by 8 is equal to 21,000, where 21,000 is the capital of the C. His existing capital is only 18,300. So 21,000 में से 18,300 निकाल दिए तो 2,700. Okay. So you should be very careful while reading. So A will withdraw 4,300 because his capital is in excess of the requirement by 4,300, whereas C's capital is in excess of the is short of the requirement by 2,700. So A will withdraw from the business 4,300, C will bring 2,700. So carefully try to understand what you need to do. The final new capital must be distributed among the remaining partners in their new profit sharing ratio, and you have to compare their old capital with the new capital. If old capital is more than the new capital, that fellow need to be paid off. If old capital is less than the new capital, that fellow need to bring the cash. So B is the right answer. Question number 49. A, B and C are partners sharing the profits and losses in the ratio of 5:3:2 respectively. B retired. Who retired? Underline it carefully. And A, B and C, after all necessary adjustments, their capital stood at 86,400, 73,200, 22,400 respectively. The cash and bank balance as on 31st March 2009 amounted to 8,000. Acha. B was to be paid through cash bought in by A and B in such a way so as to make their capitals proportionate to their new profit sharing ratio, which was to be 3/5 and 2/5. Calculate the amount of the cash to be brought in by the continuing partners, assuming that the minimum cash and bank balance of ₹6,000 was to be maintained. So write the procedure, friends, fast. That is, amount to be paid to Mr. B, 73,200. Closing cash and bank balance that should be 6,000. Add करें तो कितना आ गए? 73,200 plus 6,000, 79,200 less existing cash and bank balance, 8,000. Then cash need to be brought in by remaining partners. Balance is cash need to be brought in by the remaining partners. कितना कैश होना अम्मा? कितना कैश होना? 79,200. That 79,200 need to be brought in by the partners. If that is the case, 79,200 is to be brought in. How much A need to bring and how much B need to bring is a point. How much C need to bring. You came to know what is the amount to be brought in, but how much A need to bring and how much C need to bring. Write the point. That is total new capital. How to calculate the total of the new capital? That is A's का कैपिटल कितना है? 86,400. B's कैपिटल, add B's capital, add B or C. Who is retiring? B is retiring. C's capital, add C's capital, 22,400. Less reduction in the bank balance, less reduction in the bank balance. How much is the reduction in the bank balance? Opening bank balance is 8,000. If you keep, what is it? If you keep 6,000 as a bank balance, that is enough. That means 2,000 is the reduction. See, how do we calculate? Write down a small note. Leave that calculation and write down a small note. That is, amount of cash to be brought in, amount of cash to be brought in by the new partner, by the existing partners is to be calculated as under, that is, total capital of all the partners, minus reduction in the closing cash and bank balance, minus reduction in closing cash and bank balance. What is the heading that you wrote? Monica, read it once again. What you have written? Amount of cash to be brought in. Nahi hai. Cut it off and write total amount of capital of the reconstituted firm. Total amount of the capital of the reconstituted firm. Total amount of the capital of the reconstituted firm is total of the existing capital minus reduction in the cash and bank balance, So what is the total capital, friends? 86,400 plus 86,400 plus 73,200 plus 22,400, total is 1,82,000. And how much is to be reduced, friends? How much is to be reduced in the cash and bank balance? 2,000, because 8,000 is the existing, and if you keep 6,000, that is enough. 2,000 nikal diya to 1,80,000. That 1,80,000, how you need to distribute among the existing partners? Write down amount of the new capital to be distributed among the remaining partners, in their new profit sharing ratio, that is a 3/5 and a 2/5. Thus, A's capital requirement, 1,80,000 into 3/5, 1,80,000 into 3/5. How much? 1,08,000. Capital requirement of C, 1,80,000 divided by 5 into 2 is 72,000. 72,000. Thus, amount to be brought in by A is equal to amount to be brought in by A is equal to new capital minus old capital. New capital minus old capital. What is this new capital? 1,08,000. 1,08,000 minus 86,400. 1,08,000 minus 86,400 is equal to 21,600. Similarly, amount to be brought in by C is equal to, amount to be brought in by the C is equal to, how much friends? What is his new capital? New capital कितना उसका? 72,000 minus 22,000 minus 22,400. 72,000 minus 22,400. 49,600. Like that, B is the right answer. This is a very, very important question. So here, what is the concept? Try to understand. First, what is the total amount required for discharge of the old partner? कैसे मालूम हो जाएगा? Total of the cash required to discharge the old partner is, what is the amount to be paid to the retiring partner, and what is the closing cash you want to keep. That too you add and reduce from that the opening cash and bank balance. So that will be the amount of the cash that is required to discharge the retiring partner and to keep a required closing balance which is given in the problem. Then who has to bring what, how to calculate? Who has to bring what, how to calculate? Total existing capital now less the reduction in the cash and bank balance. Let us suppose instead of saying that you have to keep a closing cash balance of 6,000, if the problem says that the closing cash balance should be 10,000 बोले तो आप क्या करते? That the difference of 10,000 8,000 again fresh some person has to bring. So capital is to be increased by total capital plus increase in the cash and bank balance. If it is a reduction in the closing cash and bank balance, it is to be reduced. If it is an increase, it is to be added. This is the total capital that is to be distributed among the remaining partners in their new profit sharing ratio. Their new capital will come. New capital is to be compared with the old capital. Then that is the amount to be brought in by the, what is it? The new partner, the remaining partners on admission of a partner, so that with that amount they can discharge the retiring partner and also keep the required closing cash and bank balance as a point. Question number 50, friends. A, B and C are partners sharing profits and losses in the ratio of 3:2:1. A retired and goodwill of the firm is to be valued at 50,000. Goodwill account is to be raised. What will be the treatment of the goodwill? Goodwill account will be debited, partners capital account will be credited. In which ratio? In their profit sharing ratio of 3:2:1. So entry is goodwill account dated to all partners capital accounts. So answer is credited to the partners capital account rupees 50,000 in their old profit sharing ratio. B is the right answer. So friends, we did with 50 multiple choice questions in this topic of retirement and death of a partner, and I am giving remaining 25 questions as a homework to the students, and solutions are already, that is options are already given in your printout or the handout which you have or the book. So sincerely do those remaining 25 questions also. If you face any problem, then you please feel free to mail us to our mail ID yca_fca@yahoo.com. All your queries will be definitely be answered. But I don't think so students will face any problem in solving the remaining 25 questions, because you listened so much in the form of concept, then we did the problems, then we did the multiple choice questions. With that, I complete the partnership accounts as a point. Thank you.